most portfolio managers are looking for some kind of alpha to beat the market, if you will, for their clients. Vanguard has something called Advisors Alpha. What exactly is that?
Yeah, Advisors Alpha is actually a way that we believe advisors get a value for their clients through financial planning and behavioral coaching techniques. So it's a concept that we created in 2001. And at that time, we just said advisors can add value with behavioral coaching and financial planning. In 2011, we put out a paper on it, and we said advisors should consider reevaluating their value proposition and framing it more towards behavioral coaching and financial planning as opposed to trying to pick investments to beat the market, because we think that adds reliable and more consistent value. And in 2013, we put a number on it. So we quantified the value of advice being the value of working with an advisor is helping investors keep up to or even exceed 3% in net returns.
Can you talk a little bit more about behavioral coaching and what kind of value that provides?
Sure. So behavioral coaching is about 1/2 of that, up to 3% of the value of advice. And it's really advisors acting as emotional circuit breakers and helping their clients stick to their plan in both the best and the worst of markets. So abandoning a well-thought-out strategy could be very costly. So if I just give you a quick example, for a 50-50 investor that was at the bottom of the market in COVID, so say 2020, if they called their advisor and said, I'm really worried, I want to bail to 100% cash, or I want to get on my 50-50 and move to 100% bonds, through 11/30 of 2022, if they stayed the course with a 50-50, they'd be up 4%. If they went to 100% cash, they would be down 16%. If they went to 100% bonds, they would be down 25%. So this is how advisors can add value, by talking to their clients during emotional and volatile times and helping them come up with the plan that's best for them.
So clients are speaking with their advisors, and their advisors are speaking with you over at Vanguard. Can you talk about how you coach the coaches?
Yeah, I mean, really, it's just partnering with them. So advisors are very smart, right? They know what they're doing, but it's, can we provide examples? Can we provide ideas? Can we provide thought leadership to help partner with them so they can be more effective in their client conversations and interactions?
So talk a little bit more about what happened over the course of COVID, because that's a great example that you gave. So can you dig a little bit, once again, deeper and talk about Vanguard working with advisors and the ultimate payoff for their clients?
Yeah, I mean, there's a few different ways if you think about it. There's proactive coaching. So I would say proactive coaching is planning ahead, right? Having a written financial plan. And then after you have the written plan, it's kind of setting a reasonable expectation for risk and return. And then getting an asset allocation they can stick to, invest in worse markets. There's reactive coaching, which is really what happened during COVID. And reactive coaching is really looking at what your clients are going through, providing a historical perspective, seeing which clients are most impacted. So a lot of investors, maybe very conservative investors last year, say 20% in equity, 80% bonds, 30% equity, 70% bonds, may have had negative returns for the first time in a long time. They may also be the people who are in retirement. So this is where advisors can reach out to those clients, come up with a plan, and let them know that staying the course does not mean doing nothing. They're actually looking at the portfolio and revisiting areas where they could make a change.
And then finally, last year, we heard about the demise of the 60-40 portfolio. You keep splitting up stocks and bonds, 80-20, 70-30. Do you think heading into 2023, I know we're already in it, but people will come back to that 60-40?
I think they will. I think having a long-term plan and not reacting to what's going on in the markets, just like the example that I shared, right, really helps people have realistic expectations going forward and kind of tune out the noise that's going on in the markets.
All right, well, thanks a lot for coming on and talking about it.
Thank you. So nice to speak with you.